All right, guys. Uh, welcome to today tutorial again. In the evening time, we analyze this market. Sorry, that was in the morning. I make analysis of this market, and we were using 4 hours time frame to do our analysis. So, if you watch my previous video, you find out about this. So, we are briefly going to make use of this period. We are using 15 minutes time frame and 5 minutes time frame. Like I said before in a previous video, that making use of ICT. We are using ICT training like mostly for beginners. So I'm showing you guys on how you can trade using ICT trading and all the skills that is necessary for you to be very effective in trading ICT. So let me clear all this out. Let me clear this, take this out, because I don't need them. I need to explain it from the beginning for you guys again. All right, so I take this to 15 minutes time frame. I take this to 15 minutes time frame. So we have a better picture of what we're looking for. Uh, Now, this is one of the most important skills ICT make good use of. It's one of the most important skills. Now, whenever whenever there is a consolidation, whenever there is a consolidation, okay, I'll take this as a first example. So I'm going to make use of this as a first example. So let me highlight this, something like this. Like this point here is going to be our first example. Okay, so let's make use of white. So let me zoom in so we have a better picture of it. Now, if you take a look at this candle, if you take a look at this candle here, this particular one here, if you take a look at this particular candle here, at this point here, if you take a look at this particular candle, now this candle breaks a support. This ICT strategy plays a whole lot whenever we are trading in a smaller time frame. Now, this breaks the support downward. Now, whenever it breaks a support like this or breaks a resistance level, they will, as an ICT trader, you wait for a reversal, a pullback. Now, this pullback will create a fair value gap. This pullback will create a fair value gap. I zoom it again in so we'll have a better picture of it. Now, I think let me delete this out. I don't need this. Now, this, like this is a pullback and we have a fair value gap somewhere. So in a smaller time frame, that's where you have a better picture of it. We have a fair value gap somewhere. In this point, there's a fair value gap. How do we know that there's a fair value gap? Because this candle here, This candle has not fully closed down. If you go to a smaller time frame, you will find out the fair value gap. But let's just go ahead and zoom and go to a smaller time frame so that we'll have this 5 minutes time frame. So let's just look for the fair value gap for the sake of this tutorial. So this is the 5 minutes. We'll sweep down to, we have this. Yeah, exactly. We have these 2 minutes time frame. So all right. Now see where we have a fair value gap here. I'll zoom it in because this is a smaller time frame. Now this is the candle. This is the candle where this is where the movement of reversal took place. This is a smaller time frame. So whenever there is the reversal is going to be a valid reversal, there will be a pullback that starts with a fair value gap. For example, now if you take a look at this, when this candle, this first one comes and this first reversal, there's no fair value gap. So this one, this candle closed this one. So this was supposed to be a fair value gap, but this man here closed this fair value gap. And then we have a little bit reversal again. Now, another pull. Now, at the here, we have, there is a fair value gap here. There's a little fair value gap here. Now, there is another fair value gap here because of this man. If you watch my previous video again, you'll find that I told you once before that whenever two fair value gaps are created, that the market will always respect the first fair value gap before pullback. Now, you take a look at this. This is the second fair value gap. So the market rallies into this fair value gap. So the moment the market rallies into close this fair value gap, that is where your TP comes in. So wherever it closes, that is where your TP. You can actually take your TP here and place your stop loss. Place your stop loss, let's say, probably below this point. Yeah, this is the last ending point. You can keep your stop loss here. Now, this fair value gap is a confirmation for entry. But the same thing too, if you are not comfortable of trading this fair value gap or trading this method, you can also come, you can also exercise patience to wait for the market to break this candle, this particular candle here, this up here. You can wait for the market to break. Let me mark it out so that we have it. No. Okay. All right. Like this candle here. So this is the candle of, this is, you can concentrate on this particular candle here. Now this candle here is the one you are exercising patience for. Once another candle crosses the head of this other candle, let me mark it out so that we have a better picture. Like we have, this is the head of this candle. There's a, so the moment the candle, any candle breaks above it, for example, after confirming this fair value gap, you wait for reversal. If this candle will be broken, if the upper candle that is formed will be broken, so once it is broken, you can also take your, you can step into the market and take your stop loss and keep below here. Then you wait for a good buy. So that's how the market rallies up. Now, Like I said before, what you are targeting, where exactly will be your TP? That's a very important question you should ask yourself, because you find your stop loss. Where are you putting up your TP? Your TP is going to be the next, the previous fair value gap. Look at this fair value gap here. There was, if you look at the previous, there's a fair value gap that was created. So it needs to be filled up. If you have not watched my money section video, I can just say you should go back and have a close look of it, because it's really help. Like we have this a fair value gap. See, now the market respects this fair value gap. See, after taking out this fair value gap, this is the market. It hits the fair value gap and then reverse immediately. Take out this fair value gap and reverse. Don't forget we have a little fair value gap here. It might not be today, but the market is actually going to come and take out this fair value and hit the fair value gap and make a reversal. So, okay, we have a, okay, this one is a very big move. So, to another point. So, this fair value gap here, expecting the market also will come in to hit this fair value gap, take out this fair value gap. Sorry. So now, where are you putting your TP? So this is your TP. So the moment you take in your TP, at this point, you are out. So this is where your TP should be. So possibly this is 1:2. So put in your TP and you take it out. And that's okay for the day. Okay. So let's go ahead and do the last analysis for this class again. All right. We have a very big move somewhere like this. A very big move, something like this. Let's see. Now, we look at this big move. After this move has broken this, now it keeps reversing, keep coming down, going bearish. Now, it is, you don't, the question you ask yourself, when exactly should you step into the market? When exactly is the market comfortable enough to step into? So I zoom this to make a brief analysis. Now, if you take a look at this market, when it's reversing, we have a fair value gap here. There's a first fair value gap we found here. And I'll zoom it in again. That we also have a second fair value gap between this one and this one, which very small fair value gap between this. So there's a fair value gap here. So, like I said before, once this fair value gap, two fair value gaps have been created, it will always come in to take out this first fair value gap and then make a reversal, just like this. So here, it comes in, this market reversing, clear out this fair value gap. The moment it clears out this fair value gap, clears it out, and then what next? A reversal. A very good bullish move. So where will now be your stop? You have to exercise patience. It crosses these other candlesticks. The moment it breaks, this candle breaks it up, and then what's next? This will now be your entry, where you take your stop, your TP. Okay. This. Okay, this where your TP, your stop loss will be, and then your TP, you aim at any closable fair value gap. So we can take this other fair value gap up here, just taking this closing of this fair value gap. That's okay. still 2:1, just as that. So you can keep watching this video over and over again so that you get a good analysis of what I'm trying to explain. You might not really get it now, but go back and watch my 4 hours video so that you can do a top a rundown analysis from the top down to the lowest time, from a higher time frame down to the lowest time frame. I thank you guys for watching. I'll see you guys